Mark Campen, a realtor on the Illinois side of the river. And just on the subject you were speaking of, my question is, how many times do you see a borrower getting in trouble, not with that original loan, and maybe a good realtor has hooked them up with a good lender, and that loan is fine, and they would have been fine if they would have just paid on that. These people are listening to the TV ads, essentially use your home as a checkbook.
Right.
How many people are getting in trouble with this? We're seeing this to some extent in our locale, and I think we have fewer problems than some of the other neighborhoods, but this is kind of a hot button for me. This easy credit and the come-ons that you see on television.
Right. And you can save money on your taxes. If, you can deduct it from your taxes.
If you can make your major mortgage payment, yes,
right,
yes,
right.
yes.
Yeah.
Yeah.
I want to jump in. I think that we talked about scams a minute ago, and the sad thing to say is that it's been a scam nationwide and industry-wide. The home equity, for the most part, has been a scam. Large companies have preyed on vulnerable populations, and to, as Linda said, making your home a checkbook was never intended for home ownership, but the advertisement industry and large banks saw money there, money to be made.
And there, in answer to that, or part answer to that, there are reasons to do what you're saying, but I'm talking about the unscrupulous lender that jumps in. They'll look at the county records of purchases from the last year or two,
sure,
and they're on the telephone.
Sure.
I can, do you need $40,000?
Right.
We can get it for you.
Yeah.
And
A lot of high-pressure tactics there.
Yeah, and how much of that are you seeing with people that did just that?
see it all the time. I mean, most of the cases we see involve refinances, and if it's a loan that was refinanced within 3 years, there's a federal statute that sometimes allows the borrower to cancel the loan, called the Truth in Lending Act, depending upon the circumstances. Another effective statute is a Missouri statute that prohibits deceptive practices. So if the borrower was talked into a loan that makes no economic sense, sometimes that's a remedy as well.
And we're seeing that a lot too. Oftentimes we see borrowers that are actually preyed upon. I mean, it's just a lot of times they're in a vulnerable state to where, like, if they're in a crisis situation, they'll usually just latch on to the first product that they'll usually see. So I mean, we're seeing that, I mean, a lot of times, and I think a lot of this speaks to the fact that there are a lot of products that are out there, but the biggest situation is a fit for that particular product. A lot of the people that are preyed upon, that particular product does not fit that particular borrower or whatnot, and that's where you see a lot of the unscrupulous dealings that are taking place nowadays.
And you know, Ruth, I like to give the example. For instance, if you put that beautiful blue jacket on your credit card, and then you decide to take your credit cards and put them against your house, they can take your house. But if you don't pay your credit card, they can't take that jacket away from you. But if you put that jacket on your house, they can take your house if you don't make that payment. So that's why it's important to keep your home debt, and don't put your car, don't put your credit cards, don't add anything to that home debt.